Hey, everybody. Welcome to the Jay Young Show. Glad you're here today. Man, it's going to be a lot of great stuff, and we're really excited for you to be here. And I want to introduce my co-host, Jordan Soto. Jordan, how are you today?
Oh, fantastic, Jay. Thanks for having me.
Sorry, I know you need more of an intro than that. You need a band, maybe a marching band coming in or something,
Oh,
or
oh, actually, that would be very good.
that
Very
would be
good.
very good. Okay, I'll work on that. Laura, no. Uh,
Right.
yeah, we'll do that. But anyway, hey, today on the show we've got a really good friend of mine, Brad Blazar. Brad is phenomenal. He is a mover and a shaker. He's everywhere, all over the place. We've talked about that before, Jordan. Don't sit at home and expect people to know you. Don't expect get out there and see the people. Brad's one of those guys. He's raised over $2 billion for businesses and real estate projects. He started in the oil and gas business, and I forget what the years were because I'm trying to figure out is he older than I am or pretty close. I think we're pretty close to the same age. But anyway, discover Brad's journey, his investment strategies, and expert insights on raising capital from high net worth individuals and family offices. He's done an incredible job at that and knows how to talk to people and how to do the presentations. He's doing really great presentations to people, so we really want to welcome him to the show. So here's the interview with Brad. I look forward to getting to know you a little bit better, man. You've done an incredible job on accessing capital, just teaching people, what's the best way to, there's a lot of different ways on how to sell deals, but
Yeah.
you put clients involved with really good deals in the past, and that's what's very, very important. I mean, you don't want to raise money for some bad deal, but let's just talk about your background real quick and just kind of talk about how'd you get here? How'd you get to where you are today?
Yeah, well, I mean, it's a great story. Certainly, I didn't wake up one day and say, "Hey, I want to be known around the world as this guy that's raised $2 billion." I was actually planning to study architecture and become an architect, and was going to school UT Austin, and just responded to an ad in the local newspaper one day. This was, of course, way before the advent of the internet. And there was a small little local oil company looking to hire somebody to come on the team and reach out to individual investors, raise capital. So, here I was in my early 20s, went in, and the CEO and founder took a liking to me, said, you're a sharp kid, you're smart, you're cocky, you're intelligent. And so he said, if you can come in between classes and after school, we could teach you a skill, I think, make you a whole lot of money. I said, great. So here I am now, going in about maybe 12, 15, 20 hours a week, just reaching out to investors. They taught me a system that I largely still use today. And then went to work for a second oil company, Jay, doing exactly the same thing, only to find out that they were just a bunch of crooks. That's a whole nother story. But when I left the company that I was with, after finding out that they were just a bunch of crooks, all the investors turned to me and said, well, geez, Brad, what are you going to do now? I really didn't know, but I saw this huge opportunity. It was kind of like just a door in my life opened up. I had investors. I had the desire to obviously do something big in life. And I just decided at the age of 23, I was going to launch an oil company. Now, here's the funny thing. I had no knowledge of even how to drill a well, never done it. Didn't know the first thing about running a multi-million-dollar business, but what I did know how to do was raise capital.
Mm-hmm.
And so a little shingle on the door, hired a couple people, obviously brought a team together, CPAs, geologists, securities attorney. And we launched an oil company under the name Third Coast Petroleum, where, my role and the role of a couple others was basically to go out and raise the capital. And so we did that for a little over 12 years, built a nice little mid-sized oil company. And as you know, because you're in the oil business, in the late 80s, two big things changed the industry and the landscape. One was the Tax Reform Act, took away a lot of the incentives. And second was energy prices collapsed.
Yeah.
And so I slowly, over about a year, just dissolved the business. We didn't have to file bankruptcy because we were debt free. And then I made the decision to go back to school and complete my undergraduate education, and came out with a degree in finance. And I was very disillusioned because here I was extremely successful very early in life, making a great living for myself. And now people wanted to pay me a salary that was comparable to what I used to make in a good month. So I just said, I'm not going to settle for that.
Right.
And so as I'm consuming my savings, trying to support myself, it finally dawned on me that my primary skill was raising capital. And I said, boy, I bet you there's a lot of businesses out there that would like to hire a guy with my Rolodex and my skill set. And so I entered the financial services industry, Jay, basically as a hired gun, professional capital raiser. We call them wholesalers. And, eventually progressed up to the head of capital markets of some major corporations where my Rolodex today is family offices, of course, broker dealers, all the people in that industry, RIAs, sovereign wealth funds, institutions like insurance companies, pensions, et cetera. And so, collectively through my efforts and the efforts of some of the teams that I've assembled, we've raised, well north of $2 billion. And when I exited, and started my business consulting, the big thing I found from a lot of the business owners was they needed capital and they didn't know how to go out and get it. They would go to a bank and they would be turned down because they didn't have the track record or they had marginal credit. And then they would, not want to go to the SBA. And most people don't realize that there's this whole world out there of investment capital. And so we launched our platform about 5 years ago now, and it's exploded. We're in 28 countries, lost count on the number of people that we actively consult and coach, except for my higher end platforms. And it's just been absolutely great because we get to see the transformation and the change in people's lives once they learn the skill and once they're able to go out there and build their investor database.
Right. Wow, that's great. That's a great story. I mean, I know that hey, once you find your skill set and what you love doing, man, there's nothing better than forming partnerships to do what other people need to do and what you need to do to make the investor money. Absolutely. Which is the number one priority in our business. Is, hey, where's that investor and how can I make him the most money and get a good return and so I can go back to him again. Everybody, and I'll just say this real quick. And I wrote the book, Upside of Oil and Gas Investing with Forbes, and I did all that because there's just so many different investments out there that people could do, and there's the right way to do it, there's a wrong way to do it. If it's you can have a good deal, but if the structure is bad, man, it doesn't matter. They're still going to lose. You could drill a great well in the best area, but if the deal's not structured right, and if the client, you're not thinking about the client up front, then obviously that's not a good sign. So,
absolutely. It's funny you say that, Jay. I tell people that are somewhat new to this game, I say, it is challenging. And of course, there is a lot of work involved in raising capital. But I say that's not where the work really starts. The work really starts once you have the person's money, because now you got to perform and you got to do for them the things you said you were going to do. You got to look at this as being a fiduciary. They're not just giving you your money and disappearing. Now you got to actually create value. Now you got to create a return on that investment. Now you got to continue to build their trust. And if you do that job well, guess what? Who is that person connected with? Mm-hmm. What is their network, right? And so, after you build that trust, you go back to that investor and you say, hey, Jay, who are you connected with, man, that I should also be speaking to?
Right.
And before I know it, I'm now tapping into your network, and I know you know a whole bunch of rich, wealthy people. And so capital raising, if done right, can really accelerate and take off. And it becomes easier the longer you do it, actually, because, now you're able to tap into that network of other investors.
Right. How do you find them? What's been the best? Is there a key way to find a good? I read the book, Prospecting Your Way to Sell Success back in the 80s or something, and it just talked about just buy a list, call through it. If you don't like it, throw it away, find another list. There's just so many. Is there the best strategy, or is there a good way to do it? Is doing the Jay Young Show the answer? No, I'm just kidding. But
well, yes and no. Certainly, getting on shows of this nature and talking about what you do does provide exposure, does create, the what I call person of interest. But there's so many different ways, Jay, that what I explain to people is you have to find a way that works for you, that's within your comfort zone, that you can be consistent with. Of course, through the Jobs Act, where they loosen the restrictions, we can now solicit, we can advertise, we can host webinars under the Reg D 506C exemption and Reg A, which is, of course, what others choose to use. And so, that is certainly one way to get investor opt-in and create attention. You can buy a list like you just said, absolutely. You also need to understand that, in most major markets, there are investor clubs. And so if you just do a quick Google, I pretty much guarantee, they're in Dallas probably once a month. There's a group of guys or gals, and they're meeting to talk about the stock market, or maybe they're talking about crypto, or maybe they're talking about real estate. But by definition, everybody in that group is a potential target. They're investors.
Yeah.
And so I tell my students, find out where these investor clubs are and just put 2 or 3 a month on your calendar and just start networking with people.
Right.
Other ways, of course, to do that is just recognize that, in every big wealthy suburb, there's going to be a little coffee shop. And one of the things I talk about is just go to Starbucks, down there on Turtle Creek, where you get all the big, healthy, rich people, and hang out on a Sunday morning and just tell the barista, hey, here's my credit card. Everybody that comes in, you just tell them that whatever they want today is free, and it's compliments of the guy sitting right over there, and you point to me. I guarantee enough people are going to come up and thank you, and then you find out who they are, what they do. You tell them, hey, I'm a local real estate entrepreneur, and I hate calling people at night because that's your family time. But if you have an interest in learning about some great ways to create passive income, would love to maybe take you to lunch. And man, I've walked out of Starbucks with business cards for CEOs, people that basically are physicians and partners in law firms making $600,000-800,000 a year, because they literally are the people that live within 3 to 5 minutes of that Starbucks, which is the epicenter of all that wealth. But there's so many ways to literally put yourself front and center. And I think the big challenge for a lot of people is that we have to sometimes get out of our comfort zone. We have to realize that, if you're going to be successful at raising capital, you have to naturally have conversations with people. It's not just an event where you send your pitch deck out to a list of people and you expect someone's going to raise their hand and say, wow, this looks great, man, can I invest? Or, let's meet. It don't work that way. People invest in people they know, like, and trust. And at the end of the day, it is a relationship business. You have to lay the foundation for that trust to develop over time. And, it's just like dating or courting. You don't meet a pretty woman and the next day you're walking down the aisle with her. So it does take time. And sometimes people do get a little impatient and they rush the process. And then, of course, they don't get the results they're looking for. Because when you send your pitch deck or you pitch to an investor too prematurely, they're naturally going to say, sounds like it could be something exciting. Why don't you send me some information? And you do. And then they never move forward. And really what they're saying is, Jay, man, we just met. We've only had 1 or 2 calls or meetups, and I just don't know you well enough.
Yeah. It is about trust. It's about being knowledgeable. It's about being in your space and knowing. I know that we met, and there was a guy on stage, and I'm trying to think of his name. Crazy guy that he married the Spanx woman. Who was that?
Oh, yes. You're talking about my good friend Jesse Itzler. Yeah, Jesse's a rock star.
Yeah. Oh, yeah. He did the same thing. He was in California when he started NetJets. He didn't start NetJets, but I think he sold a NetJets, or he had he had this.
He actually he had a jet company that he had started, and I believe he sold it or did something. I think it was Marquis Jets, which is a huge private jet charter company. Right. Yeah, absolutely. And he also did the coconut water company and sold that to Coca-Cola. Jesse's a rock star entrepreneur. And of course, his wife, Sarah Blankley, the founder of Spanx, certainly a celebrity entrepreneur in her own right.
Yeah.
But he talks about the importance of building relationships and how being able to do that really catapulted him and allowed him to have absolute tremendous success in the businesses that he started.
Yeah, exactly. Yeah, he did the same. I think he was in Southern California, anywhere. Napa Valley. He went and bought everybody loved these different cones or whatever at Starbucks, and he bought them all. and he was just
Yeah.
out front. He was out front, and he would hand one to everybody. I mean, it's like, hey, it's a great way to open up a door to somebody that you would never
Absolutely.
have a conversation with. And will it go anywhere? Who knows? But if you do it enough times, you know,
Well, I mean, I've done it, and a lot of the people that I've shared this idea have done it, and they swear by it. They're like, "Man, I'll just go there on a Sunday. I'll, get a Rob report, or I'll sit there with the Wall Street Journal and just, hang out, get a cappuccino." And when I see someone drive up in a Range Rover or a Bentley or whatever, I just, say, "Hey, can I treat you to a drink today?" And I'm a car enthusiast. I love automobiles. Would just be curious, what do you do for a living? And
yeah,
before you know it, they're having a little chat and you exchange information, and lo and behold, it's going to work all the time. No, but if it just works a small percentage of the time, these are some of the wealthiest people in your community. I mean,
yeah,
if you go
yeah,
down to Turtle Creek, I know you know where that is. That little Starbucks is in the epicenter of all of that wealth.
yeah,
And there are homes and mansions literally within 5 minutes of that are priced at 10, $15 million.
right,
Do you know what somebody has to be worth to be living in a $10 million home?
yeah,
It ain't 10. More than likely, they're worth 100 or
yeah,
200 million to
yeah,
just be able to live in that $10 million residence. So
yeah,
um, that's how I tell people, you want to get in the front door and meet some of the richest, wealthiest families in your community. They're like, "Well, how are you going to do that?" I'm like, "You go to the Starbucks. That's where they go to get their lattes and their cappuccinos
yeah,
as they go to work every morning." And so you just start treating people and you start being very gracious. Same thing applies to flying first class. I see so many people get on an airplane and they got their earbuds in and they never have a conversation with the person next to them.
mm-hmm,
But certainly, if you're flying and you're in first class or you're in business class, more than likely the person next to you is somewhat successful.
hey,
So strike up
absolutely.
the conversation.
And if they don't have somebody or don't know somebody, the chances are they know somebody. So our
Absolutely.
business is a lot about referrals. It's about doing programs like this with people like you that we can just talk to, and hey, you know what, we're a real deal. We're not gonna our deal is not to sell you. Our deal is to put you in a project that makes you money. Let's talk about that real quick.
Absolutely.
What makes you money? What kind of investments have you seen I don't want to say the biggest return, or because I don't want to knock on oil and gas because we're obviously in the oil and gas business, but what's been some of the good real estate deals or storage, or what kind of money? I mean, I guess you've seen different times, but just kind of talk to some of the best investments that you've seen in this industry, and what does that look like, I guess.
Yeah, I mean, there's different buckets, Jay. There's certainly, real estate. I love real estate for what it is. It's a tangible asset. It's got great tax benefits, generates passive income. I'm a big proponent of passive income because I decided a long time ago I didn't want a job. And so I'm very fortunate that I really don't have to exchange my time for money.
Mm-hmm.
Um, the other, of course, is just, the stock market. If you get lucky and you invest right and you do the due diligence, you can really make a ton of money by investing in winners. And so I'm very selective, do a lot of due diligence, get to know the founders and CEOs. And, looking at a couple of companies that I put some money in that are doing just absolute, really, really cool things. And then, of course, the position that I'm in, where I can tap into a network of business owners and entrepreneurs all over the world that come to me for capital. I can sometimes craft a opportunity where I say, "Look, I normally charge this. Let's charge a little bit less, but give me a little sleeve in equity, so I'm vested in your success." And that's obviously worked out really well. We have some equity in some AI companies and some companies that are doing some pretty cool things in crypto as well. Um, I won't say that any one investment is quote better than another, but I also love investments that are structured with leverage. We took advantage of some strategies a few years ago in the conservation easement space, which I learned about, which is a great way to reduce your taxable income by just basically putting an easement on a piece of real estate, and you can extinguish the rights to extract the minerals like oil and gas, or
Mm-hmm.
obviously other minerals like aluminum or whatever. And basically, the way the laws are written is you can deduct the depreciated value of the real estate because now it can never be developed to what it would have been developed at had somebody implemented a development proposal. And that difference is huge.
Mm-hmm.
And so being able to take advantage of that, where depending on your tax bracket, you get a little over 100% cash on cash return in the first year just through the tax savings, that's pretty amazing as well when you can do something like that. So, I wouldn't say that there's one that stands out. We've definitely hit some home runs, but I think that your listeners need to realize that number one, you need to be diversified.
Mm-hmm.
A lot of people I talk to, they're like, oh, yeah, I'm very diversified. And I'm like, great, where's all your money in the stock market? And they think they're diversified. I'm like, you just wait to the next bear market or we go in a recession and you're down 20%. Then you'll see that you ain't so diversified.
Right.
And so one of the things that I discuss when I'm raising capital with investors, because I believe, Jay, that one of the things we sometimes have to do is also educate. I say, Google something called the endowment theory. And see how the biggest endowments around the world invest. You'll look at their investment portfolio and it looks like a little bit of a pie chart. And they're investing in equities, they're investing in natural resources, they're investing in private equity, they're investing in real estate. Don't you think that you should do that as well? Because you want your investment portfolio to continue an upward trend like this rather than being like that roller coaster ride.
Yeah.
And that's why I'm telling you, you probably need a little bit more real estate. And we educate first, and then of course we add value later.
Yeah.
But that's how I look at my investment portfolio. I
Yeah.
got some crypto, I got some equities, I obviously got some real estate, I got exposure to natural resources through some friends in the energy space, and I sleep well at night because I really don't have to worry about my portfolio dropping 15,
Right.
20, 30%.
Yeah. Well, and equities too. I mean, equities does go. I mean, you can be diversified in stocks, but the stock market goes up or down, just like everything else. It's not like all of a sudden
Exactly.
if you
You know,
go ahead.
Even real estate investment trusts. People
Yeah.
think, oh, I'm going to buy real estate in a REIT. Okay, and so you own Starwood or you own a couple of other REITs that trade on the market, and the market pulls back. Those stocks are heavily correlated.
Yeah.
More than likely, even though it's real estate, they're going to drop because they're heavily correlated to the broader market. But when you own private real estate or you own interest in natural resources through a drilling program, now you're completely non-correlated.
Mm-hmm.
And so, you get that benefit, plus, of course, the other tangible benefits that are inherent, such as the tax benefits. And so
Right.
when I look at an investment, I look for three things. Now, all investments won't have all three, but is there cash flow? Is there upside appreciation? Are there tax benefits?
Right.
And if there are to those three, I look very, very seriously. Mm-hmm.
Yeah. Oh, that's good. I mean, that's really good. I mean, it's you got to look at everything, but you also have to look at what's going to happen in the market with it, gold and silver, Bitcoin, real estate, storage.
Absolutely.
There's different investments in real estate. If you've been in apartments, 2, 3, 4 years, if you just got into apartments, or if you had some apartments, it's like commercial real estate. A lot of my friends are saying that, they're into some really great deals and great credit with their commercial buildings, but that note's coming due. And when it comes due,
Yeah.
it was at 2, 3, 4%. Well, it's going to come due, and you can't get anything between 7, 8, 9%. And
Right.
they want pay down because the equity and the value's gone down so much that you're going to have cash calls, and you're just, and that's just the way the markets are. And our goal is to have the best oil and gas product for an investor, because we want to make sure that, hey, we have drilling, so you have the tax benefits, you have monthly cash flow, and we also have another secret up our sleeve that we're working on right now and doing our due diligence that I think is just incredible part of an oil and gas fund that is involved in the oil and gas industry, but it's also something that can give you great cash flow, but also too, you can value add and sell it. A lot of oil and gas funds,
Sure.
a lot of oil and gas investments, you'll never be able to sell it because all you do is you go in, they drill wells, and then that's it. The best checks you'll see is when all the wells are online, and that's it, going down. We use the initial equity, the $100 million in equity. We'll use that, and then we'll go drill the wells, do all the things necessary, and then we'll use that as collateral. We'll use that as collateral to go in
Sure.
and increase and get a credit facility on it, and then we'll increase the value drilling more wells in the future and increase the value, but also, for our investors, maybe the income, or we'll put some of that income back into our fund to drill more wells to increase the value, to have have a liquidity event.
Sure.
So
Yep.
it's a lot different than it was back in the 80s, 90s, and 2000s. The industry is going to a different way. So that's why I wrote the book. Hey, be cautious. Don't
Sure.
look for a project that and I just took the real estate model. I mean, I took a friend of mine, David Moore, here in Dallas. He's a multifamily guy, and he probably manages 70,000 doors, and he's an incredible guy, good Christian man, and I just took his model. 2015, I was asking him, man, what are you doing? How do you do it? And he told me about this value add thing in real estate, which I had no clue. It makes sense, but
Sure it does.
It's never really been put into a retail project for an investor, which is what I wanted to change. So I love it.
Yep.
So tell me more about yourself, or what do you see in the opportunities coming into the next 3 to 5 years? Where's the opportunities that you see?
Well, it's really interesting. We talk to so many people, not only myself, Jay, but obviously the people on my team. And what I'm hearing from a lot of people that are in deals is they're getting a lot of capital calls.
Mm-hmm.
And as a limited partner, when a operator reaches out to you for a capital call, you got to look at that like, well, this is just a Band-Aid to fix a problem. And so you got to ask the real hard questions. And also, of course, know your rights, as a limited partner in a deal. But I think that, looking out over the next 3 to 5 years, if you have the ability to raise capital, the world's going to be your oyster. I think that we're going to see a lot of great opportunities out there. I think that there certainly are some great opportunities in the AI space and using AI, obviously, to do certain things in business. And I'm really, really very bullish on, the direction we're headed, obviously, under the new presidency. As he says, drill, 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 baby. Mm-hmm. So I think the energy space is going to do well. I think that the real estate space is certainly going to do well. And it's really just, again, it's about, being selective and being opportunistic. We have a real estate fund. And so, my partner and I, we do what you do. We go out and attract and raise capital from individuals. And we look at cash flowing multi-tenant properties. We love multifamily, but we also love the self-storage space for the simplicity and the ease of what that delivers. Mm-hmm. And we like other sectors where you have multiple streams of income, like mixed use. But, when I look out, the next couple of years, what I really see is opportunity. And I see basically certain industries really just evolving and doing, much, much better. I'm talking to a guy actually here in Houston that's backed by a big family office. And he is one of the largest developers of very, very high-end modular homes. And when I say modular homes, I'm not talking about the type of modular homes that most people are thinking of. I'm talking about beautiful master plan communities with clubhouse and amenities, and they take care of everything for you. But they're able to build a home literally much faster than most builders, and they're able to do it at a significant fraction of the cost. And so this solves a huge problem just in the housing industry. And so we're looking to put some capital to work in that space as well. But, you also have to look at certain industries that are tied to the changes in population, right? We all know, baby boomer wave and what that does for certain sectors of the economy as well. But overall, I'm just real bullish. I'm investing and we're raising capital. And, much like any prudent investor, you definitely have to do your due diligence, really get to know the operator that you're partnering with or get to know the team that you're investing with. And so I always tell people that are in our community, do some real due diligence, ask those hard questions, because if you don't, it can be very costly for obvious reasons.
Yeah. What are some of the best questions that you would say? Give me 2-3 questions that people have asked you that you're glad that they ask you. Because, a lot of times you wish they'd ask you because they don't come back to the phone, or with caller ID now, it's like you can't get a hold of them and ask them. But what is it that you wish that they would ask you, or what do you kind of tell them up front about what do you wish they'd ask you?
Well, I mean, I think, the one thing as a operator is we're always so focused on, raising money, pitching our deal. But I think that you really do yourself a disservice by not pausing and actually sharing with that new potential investor some of the risks.
Mm-hmm.
And so, in raising capital, after I kind of give my pitch and I talk about this great investment, I pause and I say, Jay, I'd also be real remiss if I didn't share with you some of the potential risks because most investments do have risks. And so I disclose, traditionally one or two of them. But then from my perspective, I address how we would deal with that in the event that happened because subconsciously what that investor's thinking is, wow, well, if they thought of those two or three things, they probably have thought through the other concerns I had as it relates to risk, and then they never ask
Mm-hmm.
because they just make the assumption subconsciously that, well, if you thought of those risks, you probably have thought of the other things I was going to ask you as well.
Yeah.
So it's one way of overcoming that objection or that hesitation that a lot of people have. But
Right.
what I usually do when I'm talking to somebody is I'm like, great, I love your plant performance. I love the track record you guys have been doing. Walk me through a deal that didn't work so well for you.
Yeah. Yeah.
And I have them focus on that
Right.
to see what it was they did,
Right.
how they responded in a time of crisis, or how they responded when things weren't going as well as they had expected.
Right.
And I've been doing this long enough. I know, like you, Jay, where I tell people, look, I'm smart enough to know that bad things happen to good people, right?
Yeah.
You've done your underwriting. It's a nice asset. It's a good part of town. But sometimes shit hits the fan. We couldn't plan for COVID. The people that own real estate in California couldn't plan for the fires.
Mm-hmm.
People in Asheville, North Carolina couldn't plan for the hurricane. So walk me through a situation in your prior experience where things didn't go as planned and share with me what it is you did and how you responded. And I
Right.
can learn a lot from an operator just in that.
Right.
One of my good friends, Craig Hall, who was huge in the multifamily space and at one time was one of the part owners of the Cowboys. He now is in California with the beautiful winery. He did something that a lot of people would not do. He literally relinquished and gave up all of his back end general partner participation to give the limited partners greater ownership in his deals to try to make them whole. He's like, I'm working for free now, folks. Like, I've given up all my back end. It's all yours because the banks are coming after me. They're not being responsive. And so, in an attempt to give you a greater chance to be made whole, I'm giving up all of my back end participation, which I thought that was real noble and real
Yeah.
generous.
Yeah.
And so, there are things that you just have to really explore as it relates to the operator. What I've learned is there's a big difference between people that make their money through syndications and fundraising versus the business they're actually in, right?
Right. Right.
And so you kind of have to look optically through the business and really say, are you just in the business of raising capital, or are you truly an oil and gas company
Yeah.
where this is ancillary to this and one serves the other? Because I've seen a lot of people out there that really, at the end of the day, they're just glorified capital raisers. They make a lot of fees, and the returns to their investors are marginal.
Right.
And so you really have to look at the track record, and again, you just have to ask those tough questions.
Right. That's true. I mean, there is a lot of people out there, and when you're just starting out, I mean, like when I was just started out, I didn't have any production, right? I mean, there wasn't a check coming in to help me on this side over here at all, so I had to make a small piece of the pie when you're raising money, But the question is, do you do that to make sure that the investors don't make any money, or are you doing that in lieu of, the client making any money? Because like I said earlier, I mean, and you know this too, it's like some deals you could hit, Giant or whatever it is, James Dean could come down, and all of a sudden, man, you're hitting the best one, but if it's not structured the right way, shame on the investors. Well, not shame on the investors. Shame on the operator.
I know a lot of people, obviously, in the broker dealer and in the professional financial services space. Unfortunately, the little investor, most individual investors don't have access to third party due diligence. It'd be great if they did. Most don't even know it exists. But working in the industry and obviously having friends that provide that service to the financial services firms that place a lot of capital, you get to realize there's a lot of things that we need to look into. Now, most people can't do LexisNexis background checks or discern whether somebody has a bankruptcy in their track record 5 or 7 years ago.
Right.
Those things should be disclosed in the memorandum. But a lot of times they're not, and so you just really have to probe. And obviously now with the advent of the internet, you can Google and get a lot of good information to see if they're a bad actor or they're not telling you something that might be public record. But don't just take everything that you hear at face value, folks. Take it in, but then obviously inspect what you're told and verify, because
Yeah.
the last thing anybody wants to do is invest 50, 100 or more, and then obviously not see the return on that as expected. And that can be really, really costly to your future, and more importantly, obviously, to your retirement.
Yeah, that's true.
Yeah.
Very true. I mean, and there's a lot of shysters out there. I mean, there's a lot of people out there that all they care about is making that buck up front. And we all have so many stories like that. We don't want to talk about it anymore. It's like we could sit here and
That's it.
we got a cutoff here in a few minutes or 10 minutes or 15, whatever. And it's like, man, we could talk about all the bad, but let's not talk about that. Let's talk about the good things. I mean, so is there anything else that you're seeing in the industry, or you're raising a fund right now? And I guess they can go to the website or go to Brad Blazar and they can find out more about the real estate fund that you're doing. Is it only in? You said you're going to do something about developing real estate development. Is there more to it than just real estate development, or what are you raising money for right now?
Yeah, so it's real estate related. We are basically raising money for real estate opportunities. Not that we're solely focused on multifamily, or we're not solely focused on storage. I like to give myself latitude as a sponsor so that when I see opportunities that come my way, I can take advantage of them if I feel they're going to be a benefit to the investor pool that we've curated.
Mm-hmm.
But in my community, with the people that I coach, actively consult, we have just people doing all kinds of stuff. A lot of people look at me as a, quote, capital raising guru expert, and they think, oh, everybody he teaches has to be in real estate like some of the others out there. No, not at all. We have people that are raising money for Broadway shows, major motion pictures. I got people that are raising money to take a physical product they've launched all the way through the prototype and distribution. Mm-hmm. Obviously, we got people in real estate. We got people in natural resources. We got people that are in artificial intelligence, people that are in crypto. So, we have people that are raising capital and or launching funds for just all kinds of stuff. But it all comes down to really following a proven blueprint and a proven system, and how we raise the capital, how we approach investors, how we communicate to investors to build the trust. Mm-hmm. And so by providing that blueprint and providing the framework, we can bring certainty to the outcome, i.e. you do these things, you have a good story, you get some good marketing materials, and you obviously are familiar with the regulatory environment that we have to operate within. You can be a very successful capital raiser and actually, make this dream that you have of doing something bigger in life come true. I think it really is just very challenging for a lot of people, because my belief is most people in the world, not everybody, but most, have something inside them where there is a dream or a desire to have a seat at the big kids table, to be doing something bigger. And what I've come to realize is it's not necessarily the fear that holds them back from pursuing that. It's just the fact, in reality, they don't have the money.
Yeah.
Like, I was talking to a guy a couple of weeks ago, wants to open a restaurant. I'm like, well, what's holding you back? He's like, I don't have the capital. I've been turned down by the bank. And I'm like, well, don't you realize there's plenty of investors out there that invest in real estate and invest in restaurants? He's like, I never thought of that. So, he's a client.
How do I find them? Yeah, exactly. Good.
That people let their dreams expire and fall by the wayside. And, one of the guys that I have loved reading his books and just getting to know, Tim Grover, who was the personal coach to guys like Michael Jordan and Kobe Bryant, he said, you think the price to pay for success is huge? You wait till you get the bill for regret.
Yeah.
And that hit me hard, man. That really hit me. And it really inspired me to do a lot more, because I don't want to be that old 80-year-old guy looking back and saying, man, I had all these opportunities in my lifetime. Yeah. I woulda, shoulda, coulda. Now I'm just sitting here basically with a very meager existence when I could have amassed a fortune and taken care of my family. Get out there, guys. This is the United States of America.
Mm-hmm.
This is like known globally around the world as the land of opportunity. And it's really unfortunate that when I look at the mix of people that really make it in our country, it ain't the people that are born here, it's the immigrants, because they come here literally with nothing.
Yeah.
And they see the opportunity to
Yeah.
do something big. And then they do.
Yeah.
And, that's why a lot of the more affluent, wealthier people were not born here. They came here or their families came here as immigrants, and then boom, they get in real estate or they get into business and they do something just absolutely big. One of my good friends, Medina, came from India, literally nothing, got into the tech space, now owns a technology company where the US government is a client. He's got 500 employees on that payroll. And then he diversified into real estate. Now his real estate company has about 500 million in its portfolio, with obviously thousands of rental units. And he just bought 500 acres out in Arizona, 500 acres in Arizona. So, this guy basically came as an immigrant, and look at what he's been able to create in a couple of years.
Yeah, no, that's great. I agree. I agree wholeheartedly. I mean, it's like we want to go into different channels, and I'm like, man, if we don't go in there, I'm going to be mad because I didn't, and I'm like, wow. Hey, so let me ask you this. I got two really big questions. But the first one is, I don't know if you raise money right now for oil and gas or an oil and gas company, but if you did, what would you look at? If you're looking at me and going, all right, let's look at King Operating, what would you look at more than others, or what would be attracted to you and your investors?
Well, I mean, there's two deals that, I always look at. One, of course, is just your typical drilling program. I mean, I'm a big believer, obviously, in the future of natural resources. So, your typical drilling program. I love, obviously, platforms that are more mineral based, where they're just buying their minerals. There's a really good company out in Midland, Odessa that we've got to know called Montego. And, these guys are not drillers. They buy the minerals. And another huge opportunity, and one of my good friends actually became a billionaire doing this, is creating distribution in fields that don't currently have it for natural gas. I mean, as drilling for oil, big byproduct of that is natural gas. And many fields that we operate in, we don't have direct distribution. And so, usually the gas is flared. And so what my friend did, Kenneth Hirsch with NGP, he started putting distribution in fields all across the country, and obviously became a billionaire in doing that. So there are other companies out there much smaller that are also doing that. And I think that, with pricing of natural gas and just looking at what he was able to build, that's another space within energy that I'm also very, very attracted to. And so really it's those three things. I mean, let's face it, I understand the whole EV and the whole Tesla and Rivian, but energy is going to be with us forever, folks. It's not just here in the United States. You look globally around the world, oil is needed globally as a natural resource. And so it's never going to disappear. It's never going to go away. We use it to heat our homes. We use it as a fuel. It's also used in the manufacturing of other things like tires and plastics, et cetera. And so, as an investor, man, you just got to look at the energy space and just invest. But I would continue, just doing what you're doing now, raising capital and going out and obviously, drilling and exploring. And, maybe you look at, the conservation easement space, kind of like I'd alluded to, and just say, this is the value of the reserves. If we don't drill, we get a huge tax deduction for not extracting the minerals. And, that's just another opportunity that I really love because of the tremendous ability to reduce your taxes, not through a shelter or a loophole, but actually through an act of Congress. Conservation easement law is actually congressional law. It was passed in the 60s. So it's something that really is very challenging for the IRS to dispute. They can certainly challenge the amount of the write-off, but they can't say or accuse that you're doing anything improper or illegal because it's actually available through a congressional act.
Right. Okay. Yeah. Well, interesting. Well, I appreciate that. That's really good. Hey, so my last question is, I got two more. I'll end with Jordan's. Jordan Soto, my normal co-host. She always asks the 18-year-old question. I'll leave that one for last. But you and I'm sorry Jordan couldn't be here today. She was with me yesterday at NAPE, and She has a real job.
You left her behind. You left her there.
Yeah. I didn't leave her in Houston, but that's where she lives. But anyway, what you've shared the platform with many different speakers. I mean, world class. Floyd Mayweather. Let me think. I mean, there's Cardone, Robert Herjavec, which I like. I like him. He's a great guy. I like he has a new YouTube series going on right now. But what have you learned the most about or being with those kind of guys, man? What a great opportunity to be with people like that. What have you learned the most?
So here's a lesson I learned from Floyd Mayweather. As people, just as humans, the way that we are wired, the way our brain works, we always back away from anything that is fearful, anything that is scary, because our brain is designed to do one thing, and that is to keep us alive. And so what Floyd said is, he said, never listen to the white noise. You'll literally talk yourself right out of some of the biggest, greatest opportunities that lie in front of you.
Yeah.
And so really, I took that to heart, because over the course of my career, I reflected. I'm like, man, I've been thinking about this for a while, and I haven't done it. Or I've been thinking about doing this, and I haven't done it. And so, hearing him say that, and then hearing others like John Maxwell or, Kevin Harrington say, the word fear has 4 letters. FEAR, and what they stand for is false evidence that appears real. It ain't real. It's just your limiting beliefs talking yourself out of what could be the biggest opportunity. So really what I've learned is I just don't listen to the white noise. I just tune it out. I don't give a shit what my haters and my naysayers are saying or thinking. I just commit and take action.
Wow.
And so that's really the big thing for me as a business owner is if I think of doing something, I'm doing it. I don't care what other people say. I don't listen to the noise and the naysayers and even my own mind that I know is playing tricks on me. And so that was one big lesson is just, your mind is wired to emotionally back away from anything that you perceive as having any risk associated to it. And so that's why a lot of people that want to do big things never do them, is they talk themselves right out of them.
Oh, yeah. Yeah.
The second, I think also, is understanding that your network is your net worth. We tend to gravitate and become somewhat very similar to the 5 to 7 people that we spend the majority of our time with. And so, it's really asking the right question. I find that so many people that have a desire or need to do something will go to the internet and they'll Google, how do I do this? How do I invest in real estate? Or how do I do this? And the question you should be asking everybody is not how you do it, it's who has already done it that can give you the blueprint.
Right.
There's somebody out there that more than likely has the knowledge and the skills that's already done what it is you want to do. And so the question is, who can I connect with?
Right.
That I can get as an advisor, as a coach or a mentor, which is the reason, of course, that our industry and the people out there that have scaled and climbed the ladder of success are now teaching other people how to have equal success in their lives. And it's so funny, people say, oh, you raised $2 billion. Why are you doing this? I don't need to be doing this shit. And Tony Robbins certainly doesn't have to be running his platform, and Grant Cardone doesn't have to be doing what he's doing, bringing hundreds of people in, obviously running a successful business off of that. It's because I know the knowledge I have can really transform and change people's lives.
Yeah.
And for me, that's defining my legacy. It's basically helping others and teaching others, hey, our educational system is largely broken. They teach you how to get a job and fit in a society. And if you work real hard and you're one of those fortunate people that gets lucky because you've invested in your 401k, lo and behold, you might be able to retire in your late 60s and 70s. Reality is 67% of the people that adopt that model end up broke. They end up on welfare.
Right.
And so, I'm a big believer, man, that while you're working, invest in things that are businesses and real estate that give you the passive income, get a little side hustle. And, hopefully you'll be able to get to a point where you can fire your boss, quit exchanging your time for money, and then start focusing on, obviously, the wealth accumulation.
Right. And some people just don't want to do that. Some people are just like, they're very content in doing what they're doing, and that's awesome, and
that's fine for them. I mean, I get it. Some people just don't want to do the hard work, and, that's fine. Settle for a life of mediocrity. I choose to do the hard work, and I live a life that most envy and desire.
Yeah. So let me ask you this. for Jordan, because she's not here, what is it that you would change at 18 years old? What would you tell your 18-year-old self? Going back to right before you went to UT, if there's anything in particular that you'd have done different, or if you wouldn't have done it, or you done different, what else? What would that be? Anything?
Well, I think really two things. Number one, and this is huge, is start earlier in life. Okay, start early because the power of compounding is huge. So many people get out of college, they get their first job, they start a family, and they live check to check. If you have the ability, I don't care what amount it is, even if it's $200 a month, and you're setting that aside and you're just not touching it over time, that will actually compound to a huge multi-seven-figure amount. So the earlier start, just because compound interest, that's huge. Number two, understand the significant advantage of tax-advantaged investing in retirement accounts. When you don't have to pay taxes on your return, that's huge as well. So, 1031, where you're investing in real estate and then you're deferring the gains by just reinvesting the proceeds into like-kind properties. That's huge. Obviously, 401k, self-directed IRAs, the importance of understanding tax advantage strategies. Number three, really the biggest, is seek out a mentor. Find a trainer, a coach that can really teach you how to make a lot more money than you can traditionally in your full-time job. I mean, I've seen people, Jay, literally that get into real estate wholesaling, and on their first deal, they make $30,000, $40,000, and they're hooked. It's like cocaine, and it should be. It's like you just made $30,000 in the last few weeks. Do you realize there are people working their ass off 40 hours a week that don't make that? Oh, yeah. So go out and do 2 or 3 more. I mean, I get guys that are literally, I got a friend that literally in the first month this year made $600,000 in the first month, just real estate wholesaling, flipping houses. Wow. So imagine that. I was at a conference about 2 years ago where the host and organizer called on a kid in the audience. He said, "Where's Abbas?" This little kid stood up. He was 28 years old. He said, "Abbas, how much real estate do you have with your investors?" He said, "About $140 million in real estate."
Wow.
28-year-old kid. I'm like, holy crap. They don't teach this shit in school, Jay.
No.
But this kid, when he graduated from college, hired a real estate coach. Then he started networking with people that he graduated from that, were making $80,000, $100,000. And they started investing in some duplexes and then some fourplexes. And now the kid's not even yet 30. He's got $140 million AUM in a small real estate company.
Wow.
So it's all about getting knowledge. But again, knowledge is nothing without action.
Yeah.
You can be a great student and learn a lot, but without any action, you're never going to be able to take that knowledge and do something big with it. So, it gets back to what you said. Some people just don't want to take the action. They don't want to do the work.
Right.
That's their choice.
Yeah, no, it's true. I mean, you have to have it's like I think about Mark Zuckerberg and guys like that are just, they had the investment vehicle, and then they had the go-to or but also it's like they had somebody mentor them that came out and said, "Hey, you know what? This is what you need to do." I mean, when Zuckerberg figured out in college that, hey, you know what, this thing, this Facebook or whatever he called it back then, could be the biggest whatever, then he had to go to somebody and ask questions, and that person put him in the right platform to, obviously, he's worth $100 billion or whatever it is today. But that vehicle right there, that one vehicle, but it was because he started early. Mm-hmm. He probably didn't go out and hang out at the bars, all weekend and hang out at bars every night, and just go to work 3 or 4 hours a day where you're mentally incapacitated or whatever the case may be, and just took it upon himself to put it together, figure it out, and then all of a sudden you have the vehicle, you have the right tools, to be able to go forward. So, man, that's great. What a great podcast, man! I'll tell you what, Brad, you're an incredible guy. You've had a lot of great success, but not only that, you're also helping other people. So. Man, that's the greatest gift that you can give anybody, is really helping other people, get what they want. I mean, I'm a big Zig Ziglar, been listening to him since the 80s. Oh, yeah. Whatever, maybe the 70s. But anyway, early 80s, when I was selling fire alarms door to door in West Texas, in the summertime. But Zig says, hey, you can get anything in life you want if you'll just help enough other people get what they want.
Absolutely.
Giving back.
You bet.
That's what I see you doing. You're doing a great job and mentoring
Appreciate
other
that.
people and making sure the investor. I know we talked about we have mutual friends with the Mick Law people, and you know them very well, and I do too. And it's they do third party due diligence on people to make sure that, hey, you know what,
Yep.
this is what it is, and they'll give you their opinion. They're attorneys. They'll give you their opinion based on, hey, you know what, this is who you're dealing with, and that's good. But because that's also important, not only the vehicle, but also who you're dealing with, and
Who you're dealing with, so very important.
oh man, exactly. So, man, you put together
Yep.
some great programs, Brad. I got to go. I know that we had a hard stop about 6, 7, 8 minutes ago, but we've got
That's
to
fine.
roll. And but I wanted you to be back on the show. But most importantly, man, I want to stay connected. We haven't touched base or talked to each
No.
other in a while. I know you're in Houston. I'm in Dallas. That's a short Southwest Airlines flight. I did it yesterday. But we need to stay in touch, and we need to help each other. You help me get what I want, and I'll help you get what you want, man. Let's help each other.
Let's do it.
Get ahead.
Absolutely. Would love to.
Yeah.
It's been a pleasure. You're a great host and great questions.
Great. Thank
I
you.
hope that, your listeners take a lot of what we shared and just apply it, back it with some action. And, you'll see tremendous success. It's really amazing. If you just take action and show up every day, you're literally ahead of 97% of the population out there that's just sitting back doing nothing. So, just get the knowledge, read the books, listen to the podcasts like the Jay Young Show, and then just go out there and commit yourself to doing something bigger in life. As I like to say, we all want a seat at the big kids' table, but not everybody can sit there.
Yeah, that's true. But do it with the right people. I mean, that's what the most important. Do it with the right people at the right time, and
Exactly.
and because I'll say everything's a risk, but there's a lot of risk out there, and hey, just take it with the right people and move ahead.
Yeah.
But Brad, I tell you what, you've done a great job in mentoring other people, raising capital, and like I said, I do appreciate you. You've done a great job, and also helping a lot of other people, which is great.
It's been a pleasure.
Let's touch base soon, and let's meet up for. Maybe you go to Starbucks and I'll hand out some business cards or something.
I love it. Let's do that.
We're talking about oil and gas news this week. I tell you, there's a lot of great news out there. A lot of new stuff going on. We talked about the natural gas futures. Jordan, there's been a lot of stuff talking about oil and gas news and natural gas usage. The demand for natural gas. It wasn't, but it was $1 1,000 not long ago. I remember it was 80 cents, 90 cents per 1,000 cubic feet of gas. Today it's almost $5. That is five
That's what I was
times.
going to say. The volatility of the market right now seems to, is this seasonal or is this something we're going to continue to be expecting next
Good
year?
question. Normally going into the winter months, you see prices, start to go up because demand's going up, just like gasoline prices. During the summertime, you need more. If you have a mild winter, you'll see natural gas prices stay pretty low. But if you have really cold winters, you'll see natural gas prices go up because we'll use all of our storage. But right now, looking at LNG, because we're exporting natural gas overseas because they're paying $10-12 overseas for natural gas. So we're doing a lot of LNG, transporting it over. And these AI data centers are taking up a tremendous amount of natural gas, which they're not 100% ready to go yet, but they are. The more they're using and the more you're using natural gas, plus all the rest, the rest of the story, right? The people,
Right.
we've been using natural gas for years and years and years. So our normal usage is tremendous here in the United States. You put a couple of other usage on it, such as LNG or cold winters, you could see $10-12 gas overnight, literally. Like I said, wasn't too much that long ago. 80 cents.
I feel like it's been, like you said, like a mild, this is where it's interesting, I think, because we always talk about winter time as if, November and fall, December are winter, but truly they're kind of fall. Like winter doesn't really start until end of December, January, February timeframe. So
Right.
if we're looking at the cold fronts now coming through, then it becoming increasingly colder, then by January, what is your expectation for natural gas futures?
Yeah. But see, I think the usage or the demand for natural gas is going up so much because, Biden didn't want us to export natural gas and LNG and all. He didn't want that to happen.
Right.
And I was like, man, if Trump or somebody got in that would allow us to export natural gas, our demand would skyrocket. And we don't have that much here in the United States. We have a lot, but we don't have as much. And so we would need to increase our supply tremendously. And then you throw the AI in here, and it's just like, man, prices go up and down because of supply and demand. There's no question. It's like orange juice. It's like cocoa, all the other commodities, in the world. It's all about supply and demand. Same thing here. It's like crude oil. Crude oil is the same thing. If we're using more crude oil, and we're using every bit that we have, it becomes priceless pretty much because it's like, hey, where's it going to come from? Same thing with anything else. And so right now we're seeing natural gas prices, go up. And matter of fact, I feel like that we're going to see natural gas prices stay up here, and maybe not at the $5 level, but $4 plus. I don't see it going below there anytime soon, because, like I said, LNG is a huge market for the United States. A&I, our normal causes, plus if we have it got pretty cold in a lot of places this weekend.
Oh my gosh, yes.
Man, so therefore you're going to see a lot of demand, pent up demand, if you will, that's going to we need it, and we're going to use it up. And when we use it up, we'll see prices, start to go up or stay up, if you will.
Let's look at the macro level of this. As an investor, are you thinking that global LNG growth is going to continue through the 2030s? And what would be that driving factor?
Yeah, I do. I really do. And I think because of what we talked about earlier, it's kind of like, it's like for crude oil. Let's talk about crude oil for a second, because I know that Biden said, hey, by 2030, we're going to have 50% of the cars in the United States that are going to be sold are going to be electric cars. That sounded good at the time, I guess. I don't know, but it sounded decent. Just like he said, most cars that are going to be used by the government in California are going to be EV cars. Well, that didn't happen, and that went away. And now, we got up to like 8% of new car sales in the United States that are EV cars, electric cars, 8%, and it was going to go. Biden said we're going to 50. Well, it's at like 2%. So it's gone the other direction, meaning that we are going to need oil in the United States, and as we have oil, we have a lot of natural gas. But I can see the demand for natural gas continuing to go up. And as we go up with that, we're going to see, the prices go up as well, because we're not going to have it. It's not going to be here as much as possible. We're not drilling as much in the United States as we were 2 years ago, back in 2023, and we're going to see big, huge pockets or supply that's not going to be there as much as it was 2 years ago. Now with natural gas, I said this in a meeting about a year ago. I said, I love the upside on natural gas more than I like the upside of oil, because natural gas is like at $2. And I thought, man, it'd go to 3, 4. That's 50% or 100% increase. That's huge. And I can't see oil going from, 60 or 70 to 140 or 200, which it'd have to go the same way. So, we put a lot of our assets in use, and we started drilling for natural gas, about a year ago, all because we put things in place. We had to buy leases. We had to, look for places like this that have natural gas so we could drill for it. And so we're doing that now. It's going to be really great because when we talked about it, my team was like, man, I don't know, Jay, these natural gas projects, they don't look really good at $2 a thousand. And I said, what about 3 or 4? And they said, oh yeah, well, it looks good at 3. And I said, great, let's do it. Now it's at 5, and I look like I know what I'm doing, or I know something about something. But I'm like, I didn't think they were going to go to 5, but I did think they were going to go up. And like I said, I just like the upside of natural gas, because I was hoping that Biden, with him being out of office and with a Republican, obviously Trump, coming in, we're going to see our increase in demand. We need more oil. We need more natural gas, and as we do, prices will start to go up and up and up. And so we're seeing that now. So that's good for the industry, and it's good for the oil and gas industry. It's good for exports. And like I said, we don't have enough. We just don't have enough. And with a really cold winter, this December, January, which today it was almost freezing in Dallas. So we're getting there. And we could have a really hard winter. And if we do, like I said, we're going to have some huge problems with natural gas prices.
Absolutely. I couldn't have said it better.
Yeah.
Well, Jay, is it time for your weekly 5?
Man, we need some intro music for that. I mean, let's put on the show, Dallas. Let's have some intro music for the weekly 5. Laura, I'm not sure where Laura is right now, but Laura we need some intro music over here. All right.
She's the one-stop shop. I mean, she
Laura
really
stayed in the studio. Laura stayed in the studio today, and she doesn't want to talk about her or talk to her. Okay, so let's go with the word of the week. The first is the word of the week, and I chose gratitude. And the reason why I chose gratitude, I can't lie. Our preacher talked about gratitude Sunday, and not Jack Graham. Jack's a huge favorite. Love Jack, but he was not there Sunday. David Marvin was there. His word and what he talked about a lot was gratitude. And I love the word gratitude because it just talks about being thankful.
Yes.
We're starting up early here. We're going earlier and we're working later this month. And you could use that as a positive or you could use it as a negative. Nag, which I don't like nagging. It's so unproductive. And I like it as just using it. Hey, you know what? We're grateful. Yeah, I'm very grateful that I've got a great wife, that Jesus Christ is my Lord. I like it that I've got a good friend in Jordan. And even though she didn't send me a happy Thanksgiving. You didn't send me a happy Thanksgiving yesterday. I'm so surprised.
I didn't.
I know, and I didn't send you.
I have no excuse.
I like that. Now that's the way you do it right there. You just admit it. You're right, and I didn't either.
I caught myself. I was about to be like, okay, what can I say that would make this okay?
Yeah.
And I would say that that's like a people-pleasing tactic, but nope, we're just gonna own it. I have no excuse,
Perfect.
no reason. I just didn't do it. That's sorry.
What I'm very proud of, Jordan. Very proud of you for that.
Thank you.
Very, very good. Just own it. Hell yeah, I like it, man. That's great. I love it. Oh, the Bible verse of the week is Psalm 118:24. Psalm 118:24. This is the day the Lord has made. Let us rejoice and be glad in it. And what I take from that is, we look at that. We're thankful. We're grateful. And for everything we have. I mean, we could have it a lot worse. You know what I'm saying? We could have it a lot worse.
Well, and I think the other thing too is, each day is truly a gift. And when you have the opportunity, I mean, it's an opportunity for a fresh start. It's an opportunity to, it's just an opportunity. And if you start looking at it that way, as I have today, let's make it the best that it could possibly be.
Yeah.
And
Yeah.
go forth with that. I think that it gives you confidence. And if you have the gratitude as well with that, like those two things together really kind of can make your day shine.
Right. I agree 100%. I agree. I mean, I think about a story I heard one time where a guy said something about that there was an older lady and she was on a cane, and it took her forever to walk, 15 feet. And somebody asked her how she was doing, and she said, "I'm doing great." She goes, "I could be at home in bed, or I could be under the ground. I could be 6 feet under." I mean, it's like there's so many things to be grateful for. There really is, and I know we have it so good. And why not make it pleasant?
Right.
Make it nice to be around people. It's better to be around nice people, than to be around the people that, man, they're just they're negative and all that stuff.
Yeah.
So,
well, I had such a reflective Thanksgiving time. I was thinking back, and I've, like everyone, I had a lot of struggles that I went through, and as I was reflecting, I was like, wow, I have such a beautiful life, and I have taken myself from a very hard place to this really wonderful place that I thoroughly enjoy, and just like sitting in that gratitude and that reflective state, and seeing the journey of how I've grown, and then the people around me, how they've grown, and the community that's been crafted, and the gratitude that comes along with that. I think that being in that has, just kind of showcased, like, if you choose joy and you choose to be present in this day, there's so many opportunities available to you. And a pastor had once said at a sermon I had gone to, he said, joy is just a choice away. So choose joy, choose gratitude, and then be present. And then, pause, reflect, and look at how far you've come, and be grateful for the work that's been put in and where you're at now.
Right. I agree 100%. I think it's just so much better to be in good spirits, and you're much more pleasant to be around.
Yeah.
People want to.
I agree.
Yeah. If you're in a good mood, you ask people about them, and it's like I remember Michelle said this one time. She said, "Well, how is we talked for a whole round of golf one time, and with one of my friends, Adam McKelvey, and Michelle said, 'How's Adam doing?' I said, 'You know what? I never got a chance to ask him.' And she goes, 'You play golf for 4 hours and you never got a chance to ask him?' And I said, 'The guy asked me all about me. He wanted to know more about me, and he was one of those guys that it wasn't about him. I couldn't get a word in edgewise, but he just talked about, and what a great person. What a great person. Man, I walked out of there until Michelle said, 'How's Adam doing?' I felt really good about myself, and I was feeling good because, man, Adam made me feel really good about myself, but, man, Michelle didn't when she asked me about how's he doing.
But that's why it's important to have a good partner. They keep you in check,
I know, yeah. She goes, "Well, how's their kids?" "I don't know. Are they still going to, I think one's going to Auburn and one's going," I said, I don't know. Anyway, that's just a man for you. That men. But anyway, no, that's good. Let's start with the podcast. I got a podcast here. Lewis Howes, The School of Greatness, is one that I'm looking at now. Regular episodes highlight gratitude, mindset, and resilience. I love this too. I was listening to something, and I heard something about Deion Sanders, and Deion Sanders says, the 3 W's. And I thought, the 3 W's, okay. And
what are they?
Yeah. What are all these? And he said, what do you want? What do you want? And he said, you got to work toward it and you win it. So you gotta find out what it is that you want. And then you have to think about, okay, now what do I need to do to get there? What work?
Right.
It's not going to come free. It's not going to come just off the, what work do I need to do to get there? And then how do I know I win? It's like, okay, I win. And I love that this time. But anyway, I look forward to hearing more about the School of Greatness and understanding that podcast, which I love. Listen to podcasts. They're really good. What about you, Jordan? Anything?
Well, yeah, no, there's been this really good one. It's called We Can Do Hard Things. Glennon Doyle, like the themes of appreciation, emotional honesty, which, hey, we represented today a little bit,
Yeah, absolutely.
no lame excuses here. And then gratitude in everyday life. I think it's just a great podcast to listen to. If you're looking for something on your drive, that's a great one.
Yeah, absolutely, 100%. See, TV shows watching right now. Is this besides Landman? Third episode was last night. We're going to have a true false pretty soon about about that. But there's Welcome to Wrexham. It's on Hulu FX. It's a true story of community appreciation and what happens when leaders genuinely, yeah, value
Say
people.
it 5 times fast.
Yeah, I can't say it once. But genuinely value people. So, what story of that? Wrexham, WREXHAM, WREXHAM. It's about soccer, and it's about how it's a story about community, about appreciation. Okay.
So, big news here, Jay.
Yep.
Stranger Things just dropped their new episodes, so I've been binging on that.
Which one?
Stranger Things on Netflix.
Oh, I thought you were saying like Stranger Things have happened. I thought there's a conversation.
No, I know. It's an
Part of the
awesome show.
This
But
is a
they
show.
just released
Stranger Things.
Yes. It's like almost like an 80s themed kind of thriller thing, and it's set in it's like a school setting, and so there's these kids and then they get powers, and then there's this whole like back and forth, but they just dropped their final episode, so it's I don't want to spoil it for anybody, but it's really cool. And I think if you like Stranger Things, if you haven't watched it, you'll be able to watch all of it now. Now, this was really interesting because they ended, right? But they didn't really end the show. They just had stopped filming. And so it's been years since they were filming. So now all of the the cast is years older, right? Like Millie Bobby Brown, she has a kid. She's married. She's 20 something.
Yeah.
And so, I will say, I do think that some, people get like dad face and mom face. And so I think that she kind of like, she's grown up, she's matured. And so, now her being in the show, and then all the other kids as well being adults now, it's interesting, like the makeup and stuff. Like I work in production and have done some movie stuff. And so to see like the makeup artistry that's happening there to make them look younger, and the clothes and stuff like that, just the production elements are really cool. But otherwise, like, great show, great watch. It is a little scary, so maybe not for younger kids.
Is it on Netflix, or where is it?
Yes, Netflix.
Netflix. Okay, good. I know Michelle and I are always looking for something
Yeah, there you go.
to look at. Good. All right, what else? What else is going on?
Books. What book are you reading?
The Power of Positive Leadership by John Gordon.
Love that.
Yeah. The Power of Positive Leadership. I love leadership. I think John Gordon's a great guy. Puts gratitude at the center of strong leadership. So that's good. What about you?
Well, when you're grateful for your team, I think that the team will overperform. If people don't feel valued, I think that it's a really tough thing to keep people motivated and engaged.
Yeah.
One of the things, actually, I don't know if you do this, Jay, but when I was hiring people that would report to me, one of the first questions that I asked them was, how do you feel appreciated? How do you feel valued? Is it being gifted days off? Is it bonuses? Is it words of affirmation? Like, how can I keep you engaged in this role and feel like I appreciate you. Because I think it's an important thing to ask, how I feel appreciated and valued is not always the same as what somebody else is. But gratitude is never a bad thing to implement.
Yeah. Oh, absolutely. I mean, telling people you did a great job, and then it's like, and the reason why I feel like you did a good job was because, and make sure that you say something about it, and then talk about it, and then say, and it's just so much better to talk and appreciate people,
Yeah.
Laura's sitting here going, well, you haven't appreciated me since in a week, so
Right.
it's time for me to appreciate Laura right there. So need to make sure I do that.
Yes, absolutely. But book I'm reading right now is Daring Greatly. I am sure I butcher this name, but Brené Brown focuses on vulnerability, appreciation, and wholehearted living. So great read, easy read, definitely worth it.
Yeah. All right. Good. All right. Good.
Jay, by the way, we need to let everyone know we have a major announcement with iHeartRadio.
That's true. That is very true. We're very proud of that. We are in San Diego, Monterey, and Houston, Saturday mornings at 5 a.m. in Houston. I'm not sure who is up at 5 a.m. on a Saturday morning in Houston, but you can go back and listen. Oh, you are? You're up?
Yeah.
Oh, my God.
Oh, yeah. I have to be on my flow. If I don't wake up early in the morning every morning, then I'm not going to wake up early. I'm an all in or not at all person.
Wow, there you go. Hey, there you go. Well, that's at least one person in Houston that's up at 5 a.m. Rock and roll. And but anyway, you can also go to the iHeart radio station and listen to that. Is that pre-recorded?
Yeah.
And you can go back and listen.
The iHeartRadio app. Yeah, you can
iHeart
download
Radio
the
app.
Mm-hmm.
iHeart Radio app. Do I have that iHeart here? I can go listen to it right now.
Yes,
on my
you
iHeart.
can.
I'm not going to do it right now, but anyway, if I wanted to, I could. Saturday mornings.
You download the app and then you search for the Jay Young Show.
There you go, man. I am going to do that. I can't wait. I'm excited.
It's exciting.
In San Diego on KLSD Radio AM, Saturday mornings at 7 a.m. in San Diego. Monterey, KION AM station, Saturday mornings at 10 a.m. That's a little better. And then Houston, KPRC. I love those guys. I've been on there a few times. But anyway, Saturdays at 5 a.m. Or you can go to the iHeart Radio app and download it and listen to it right there. And I believe we're gonna have it on one of our episodes on the Jay Young Show. So if you go to the Jay Young Show and you said, hey, I want to listen to the radio station week 3, you can go right there and listen to it on there. So it's anywhere you want to be, just listen. And but I'm really excited about that. We want to get that out. We want to get Jordan, I mean, we really want to have a lot of great listeners. We want to motivate people. I've had so many people. It's really kind of crazy. I've had so many people go, man, Jay, I love listening to you. You really motivate me, and I am so thankful. That makes my day right there. I mean, I could do a lot of things, but I tell you what, if people say that, and I help them get motivated, I help them stay on track. Me and you we're doing a great job in getting the message out to people. That is so good. Doesn't that make you feel good?
It absolutely does. I mean, showcasing the opportunities and challenges of entrepreneurship and then highlighting the oil and gas industry in a way that's humanizing it instead of just vilifying or sweeping things under the rug, I think is really impactful as well. So I think what we're doing here is working, and I mean, it seems to be working. We're on iHeartRadio now. That's a big
deal. Isn't that crazy? I'd love to be all over the country. I'd really love to be all over the country.
3 major cities in.
Absolutely.
You said it though.
We got 3 so far. We're going to go to 20. I want to be at I don't know, what's our goal? We need to have a goal. I mean, we talk about goals.
I think 20 is a great goal.
By when?
The end of the next year.
By end of 2026.
Boom.
20 stations by the end of next year. All right. I think we could do big. I think we could do more than that. If we really wanted to, we could be on a lot more than that. But let's just think about that for a second, because we talk about goals. How do you set goals? You got to set goals. It has to be, it has to be achievable. You can't set a goal up there saying, I'm going to run a four flat 40, because Jay Young and his 62 years old ain't running no 4 flat 40, right? You know what I'm saying? So it's got to be achievable,
Right.
so having something like, okay, let's have 20 stations carry our show by a certain date. Now that's something that can be achievable. It can be achievable because you go, okay, this is what we're going to do. We're going to have 20 stations that we're going to be on every single week by the end of 2026, which will be phenomenal. I think I want to pump that up, but I don't know right now how I would pump that up. That's a lot. That's a lot. I'd have to get Michelle's okay on that, but we'll have to. But you know what? If we're motivating people,
that's the rule.
yeah. If we're motivating people and it's making a difference in people's lives, and people like listening to us, that's what I like. I mean, people like listening to us and what we're saying. I love that. I think that's really, really good.
Yes.
Yeah,
positive, encouraging entrepreneurship. It's been a great ride, and I'm excited for what this next year is going to bring. Absolutely.
Well, and two, you have people like me that's a little bit older, and I've been through so much that it kind of comes second nature to me on a lot of things. It's like, I know this, and it's like I've lived it. I've made mistakes. I've tried to figure it out, but you know what? I know what I need to do, and there's so much knowledge here that I started listening to at the ripe old age of 21 years old on trying to be motivated, and what do goals mean? The old Zig Ziglar, listening to Zig Ziglar and motivation and his book or books. He's got plenty of books. Closed in the Cell, See You at the Top. I mean, those kind of books are just unbelievable. And I tell people all the time, you need to read that book. You need to read these books. I was coming back from Houston on Saturday night. We stopped, and there was a little boy that was helping his dad wait tables at this little Mexican restaurant north of town. We were in Conroe, I believe. And this little boy, and it was raining, cats and dogs. It literally, cats and dogs. But anyway, but the little boy was there, and I said, hey, I don't want you to smoke, I don't want you to drink, and I want you to take care of your mother. And so about 15 minutes later, he came back over the table, and he said, sir, can I get you anything? And I said, nope. Hey, so tell me, what did I tell you earlier? And he said, I should not smoke, I should not drink, and I should take care of my mama. So I pulled out a $20 bill and I gave it to him. I thought that was so cute. Awesome. I know. I need to go back and see that kid. I really, if I could find him, I need to. It was at a really nice.
I will say, the sober movement has really impacted a lot of people, and I am a firm believer that there are a few things that people like to engage in college and afterward, and I just don't think that I don't think it's very helpful, and if you're wanting to get to where you want to go, you need to have a sharp mind, and using whether that's alcohol or drugs, it dulls the senses, it dulls the mind. And if you want to be an entrepreneur, it's really important to keep your mind in a present state and not give into that escapism.
Do you know how much time I wasted drinking? I mean, I've been sober 30 years. It's
also the hangovers. It's the hangovers too. Yeah.
I mean, the crap that I got into and, and the unproductive, I mean, it's like, I couldn't wait till I go downstairs and grab a beer, and then I grab 2 or 3, 4 or 5, and then I'm one of those kind of people that I can't drink 1 or 2, 3. I got to have it all.
Never made sense to me.
Yeah.
Never made sense to me.
Yeah. It's just crazy. And I thought about it. As a matter of fact, I did think about that this weekend. I thought about, we need to talk about, productivity and how much productivity do you lose and how much time do you lose, drinking and not being motivated and especially somebody like me that I wanted to make sure that I was an entrepreneur and that I wanted to, I controlled my own destiny, where a lot of my family drank a lot but they were in the oil business, and they drank because they worked for a company or whatever.
Right.
But with being an entrepreneur, you can get so much further ahead if you are of sound mind and you know what your goals are and you follow them every single day, and you don't really worry about,
Right.
hey, I'm going to screw this up or whatever, because I just think about that, chasing women or drinking, or I didn't do drugs, but if I'd been drugging too, oh my gosh, it's been terrible.
You might not have been here today. Who knows?
Exactly right. You're exactly right there. It'd be different, definitely. But anyway, I just think that's great, and I think that's a great message, for people. But Never Eat Alone is the book that I was talking about. So I need to think about my three favorite books. The Think and Grow Rich, maybe. I think that The Upside of Oil and Gas Investing. I think that's a really great book. I wrote it. That's the reason why I say that. Upside of Oil and Gas Investing. You know what? But it shows. It not only talks about oil and gas, and it's not only I wrote it, but it also talks about, about how to invest or the different types of investments. I guarantee you 90% of the people, if not more than that read that book did not know that there's different ways on how to invest in oil and gas. I mean,
it's really not talked about.
No.
Is the main thing
No.
here. And I think obviously one of the major hooks is the tax write-off, right? But I just don't think that there's a lot of clarity or transparency of the benefits of the oil and gas industry. And that's where that book really comes into play, because it does highlight those things. And here's the thing, Jay, tax season.
That's
is
it.
almost upon us.
We're right in the middle of tax season, and it's a tax write-off, so you can get a guaranteed return of 30-40% in the next few months, just because you write it off your taxes this year. Not that you should do it for tax reasons, and I say that in the book, but if you really want to have a chance of making money, find the guys that know what the hell they're doing, or that have good assets, that know what they're doing, and that the deal's structured the right way for you. It's amazing to me that people that went to grad school or people that went to got their MBA, they knew how to structure deals, to where it's good for them, but it's also good for the operator, somebody like me that puts up, the money to drill wells or whatever. It's good for everybody. So I think that's a very important part. And that's why I really do like the book, or I do like that on my top. I don't know about my top 3, maybe my top 5 or something. 'Cause I don't.
No, Jay, don't undersell yourself.
Okay, the top book. Okay, mine's up there on the roof.
Number 1, fine.
Where's that
Twist
book?
my arm.
No. But yeah, thank you for that. I appreciate it. And I always like talking about it, because it not only talks about my family and family history of the oil and gas business, but it also talks about what kind of structure and what's, I want clients to make money. My first goal is for the client to make money. And how can they do that? And I know there's a lot of people around here that put programs together, and all they're thinking about is, and you can't blame them. I mean, it's like they're just built that way. It's like they want to make sure they sell it and they make enough money up front, period. In the story. That's how oil deals are normally put together, and ours are put together different. Ours are put together different. We want we want it so the client can make money. Okay, so that's very, very important for us. All right, well, hey, I think we're done for the day. I can't think. I know we talked about subscribing, or write in and tell us if there's anything in particular you want us to talk about.
I think that's a great idea, Jay.
Yeah, and if there's any questions on Landman, I mean, my wife makes me stop. What does that mean? What does this mean? What is that? What's he on top of? Because they were on top of some big tank batteries.
I've gotten a few people asking me as well. They're like, how true is the show?
Yeah.
I was like, I guess you need to watch the Jay Young show, because we talk about it.
Hey, there you go. That's how I grew up, in the oil patch. And but there is a lot of questions that people have, and if you have any questions, hey, we'd be glad to go over them. I'm getting ready to record the third true false for the season. When I get off of here, I'm going to do that. And Landman episode 3. Hold on. Oh, it's when Tommy Norris says you should build it up and sell it. Because he says on the show, you should build this up and sell it. You stay in it, it will bleed you dry. Okay, so that's what he said in the show, and that's what we're going to talk about. And how true is that? I can't tell you now, but I can tell you if you tune in to the true false questions.
There you go. Hey, you have to follow along with Jay on LinkedIn. He always posts such great stuff, and that's where those truth and false go on. So definitely look him up, connect. We want to connect with you, and we also want to answer your questions, whether that's about Landman or entrepreneurship. It's always a great time with Jay and I.
There you go. Jordan, thank you very much for being here, and we'll see you back here next week.